Hey everyone, this is Logan Hertz with Hazeltine LLC, back again with Peter Nelson of Nelson Insurance Advisors, and we are doing part four of Financial Malpractice Dave Ramsey edition. Peter, how are you doing?
Great, Logan. Living the dream.
Okay, excellent. We are going to pick up where we left off with the Dave Ramsey video.
That's what it is. So the infinite banking is you put so much in the whole life that it starts to pay its own
And you
premium.
borrow money from yourself, Dave. It's
And
genius.
you borrow money from yourself. And guess what? There's no taxes on borrowed money. Well, no kidding, doofus. There's never been.
Notice the name calling. I love it. Of course, we have to have name calling. This is, after all, marketing, right? We can't just, have like a reasonable debate over what might be a good financial strategy. No, we have to call people names and say we hate things in all caps. So first of all, again, this shows Dave Ramsey's lack of even an effort to understand the infinite banking concept. No, you're not borrowing from yourself. Okay. When you take out a policy loan against your whole life policy, you're not borrowing from yourself, you're borrowing from the insurance company. Okay. Your capital is still safely earning for you in your whole life policy, and that's really important. Similar to the way when you borrow against your house, the value of your house doesn't go down. If it's a rental property where you're collecting income, that rental income continues, right? So no, you're not borrowing from yourself. I guess Dave doesn't understand the mechanics of a policy loan. Okay. And when people say borrow from yourself, people might use that phraseology, but they're using it in a conceptual sense, right? That's not what's literally going on. And so this tells me Dave has just maybe watched like a 30-second TikTok video and thinks he knows what's going on, right? Well, I could look at a 30-second TikTok video on mutual funds or Dave Ramsey or retirement accounts and get all kinds of ridiculous information, but I wouldn't conclude I know anything about the subject just because I've watched a 30-second TikTok video on it, right?
Yeah. And I think the thing that has to be clear here is actually he knows actually how this stuff works more than what he lets on. And that's one of his great marketing tricks is that, I mean, what he's doing is just trashing it, right? But he actually knows how it works. He just doesn't believe that the average American can understand it. So he doesn't want to do that. Instead, it's just, let's just trash it and, all that. So.
Yeah, as always, it's a straw man argument. He's going to set up some ridiculous caricature of what he thinks infinite banking is or what he's characterizing it as, and then take that down, right? So he uses the word doofus. He's like, yeah, of course, you don't pay taxes on borrowed money, doofus. Well, that's what really super rich, savvy real estate investors do, right? One of the reasons why real estate investors don't pay any taxes, and Dave Ramsey invests heavily in real estate, is because they borrow against their properties, right? They could sell you if you had a nice cash flowing rental property, you could sell it and make money that way, but then you'd have a problem. You'd pay taxes on all those gains, right? And capital gains would be what, a 20% tax or whatever it might be. Whereas when you borrow against the property instead, it allows you to unlock the equity you built up in the property while you continue to benefit from rental income and capital appreciation of the property. And not only do you pay no taxes on that borrowing activity, you can deduct the interest that you're paying on that loan if you're using it for investing purposes or other or business purposes, right? So very savvy real estate investors do exactly this. I don't think they're doofuses. And of course, it's important to point out that a policy loan is not a debt. So Dave Ramsey is against debt. He hates debt. Well, a policy loan is not a debt, right? How many loans do you know, Peter, where you can take out a loan and never repay it ever if you don't want to? And there's no credit check, no nothing. You don't have to qualify, right?
The only one I've ever seen was with life insurance.
Exactly. The policy loan is a very unique credit instrument. So it's important to understand that. This is really how we become our own bankers, because when you take out a policy loan, you are not borrowing from yourself. You are collateralizing the cash value of your life insurance policy, and you're borrowing the insurance company's money.
Exactly.
Meanwhile, your money keeps earning for you 100% of it, right? That's really important to understand. Okay. So again, it's a straw man argument. And if you're going to make a judgment based on TikTok videos or wherever you're getting your information, you can make anything look bad, right? I can find ridiculous caricatures of any I can find people saying ridiculous things about real estate on social media and then conclude because I watched a 30-second video on real estate. Now I'm an expert on real estate and I'm going to say it's ridiculous because of what this one guy said. Well, that's what Dave Ramsey is doing. I seriously doubt he has sat down and studied the infinite banking concept and read Becoming Your Own Banker by Nelson Nash and really tried to come to an understanding of it. Much easier to just have this very superficial marketing mischaracterization of it so you can, trash it and I guess get lots of clicks and business, but this isn't. Yeah, I mean, again,
It's a good way to sell leads to Dave Ramsey approved financial advisors, right?
yeah, this is a good way for Dave Ramsey to get attention. But obviously, I think people who are truly paying attention can see, well, Dave, you haven't even properly defined what it is that you're trashing. So anyone who's listening to this with an honest ear would be, even if they have no idea what the infinite banking concept is, they would say, wait a minute, you're saying infinite banking is code for whole life that sucks. And then you just start trashing it. It's like, hold on, that can't be right. Okay. let me try and understand what the infinite banking concept is first. And then I can decide whether it makes sense for me or not. Right.
What else did he say? Freaking fruit jar?
Yeah. I don't think these are precise definitions.
No, not the way professionals should be referencing any type of product, whether you like it or not.
Okay. Let's continue.
Borrowed money. Go there and get you a credit card debt.
Oh my gosh.
There's no taxes on the debt, you dumb butt. Of course there's not. Why is
my goodness.
I can't believe infinite banking is being made cool on
back.
TikTok.
Just ignore all
my
of
God.
that.
This TikTok thing is just driving me nuts.
Now it's tic-tac, according to Dave. Well, hey,
Well, I get it,
here's the
but I'm
takeaway. Get term life, 10 to 12 times your annual income, 15 to 20 year
you know what? If
policy.
infinite
with our friends
banking can make it on TikTok, I bet I could make it on TikTok.
For sure you can. This clip is the start right here.
Oh, man.
Okay, so again, I just want to point out the hypocrisy. Dave Ramsey is doing exactly what he is criticizing other people for doing, right? He's engaging in the worst kind of underhanded name calling, right? He's mischaracterizing, making straw man arguments about something, right? He's just, engaging in the most underhanded, muckraking style of marketing imaginable while criticizing people for doing exactly that, right? Maybe I'm not giving, I'm not on TikTok. I don't ever plan on being it, but maybe I'm not giving these TikTok videos. Oh, right. Maybe I'm not giving these people on TikTok enough credit. Maybe they understand more than Dave Ramsey, right? I mean, I think their videos might go into a little more detail than Dave Ramsey is doing right here, right? So, I mean, come on, it's hard for me to take him seriously when he just starts engaging in name calling and I don't know what to make of that other than to say, here's why maybe you shouldn't be taking financial advice from Dave Ramsey on infinite banking. Maybe you could take advice from him on toxic debt. Sure, right. But again, he's kind of acting like taking out debt on a credit card and taking out a policy loan from life insurance are the same thing, right? That's ridiculous, right? A policy loan is not a debt, okay? When you rack up debt on a credit card, yeah, that could be a problem. You're probably paying double-digit interest rates on it, depending on what you're using it for. You could get into a lot of trouble. Whereas with life insurance, it's the most responsible form of borrowing, if it can even be called borrowing, imaginable. You have to build the capital before you can take out a policy loan, right? If you haven't built the cash value, you can't take out a policy loan yet, right? So they're not giving you money, capital that you haven't built yet. They're allowing you to collateralize it, so all your capital keeps earning for you, right? When you take out a credit card, there's not corresponding collateral that's earning for you tax-free with no market risk at the same time. So again, he's not understanding how a policy loan works. Policy loan is not a debt, and he's making the absolutely ridiculous claim that spending on a credit card is the same as a policy loan from life insurance. No, it's not even close.
And I think I just want to mention that, look, you have access with a cash value life insurance policy. You have access to that money when you need it the most, right? I'll give you an example. When I was in this business, I've been in this business since 2002, 2008. The real estate market got destroyed, especially down in Florida. Okay, there was condos on the intercoastal that were going for like $100,000 a piece. Instantly, they were like $30,000 a piece. All right. You could have easily accessed the cash value from your policy, no issues, whereas all the banking system was getting bailed out, the TARP program and everything else. You could have accessed it and you could have bought 3 of them for the price of one because you had access to the money when you needed it the most. And that is priceless. And that's where you'll never hear Dave mention.
Yeah, you can't buy a condo with a credit card. You absolutely can, and people do buy condos with policy loans from life insurance, right? Because they consider that the same as cash, because it is, right? It absolutely is. You can go and buy anything you want with a policy loan from cash value as long as you have the capital there. You can't go buy a house with a credit card. They won't allow that because they understand that's not the same level of credit risk, right? There's no credit risk when you're taking out a policy loan. There's no credit check. There's no nothing. It's a contractually guaranteed right. Meanwhile, the money that you spent is still earning for you inside your policy, right? And there are no repayment terms whatsoever. Pay it back whenever you want, right? And there's even a Supreme Court case that has said that a policy loan is not a debt because there's no liability, believe it or not, right? And then again, the blanket statement at the end, just this dogmatic statement, like the lesson is get term. And I think he said 10 to 12 times your gross annual income. Like, that's ridiculous. Okay. If you're 25 years old, let's say you're married and you have one infant child, 10 times your annual income is nowhere near enough life insurance.
Especially with this inflation. No way.
Yeah, that is
it's more like 20. I always say 20 times.
No, that's not enough either. No, I mean, here's the way to look at it. Again, that's the needs analysis. I hate that word. No, it's not a need. Life insurance, technically speaking, is not a need. Nobody needs it. The question, you don't need homeowners insurance. You don't need any of these financial products. The question is, what is the financially responsible thing to do? Okay, what would you want, right? And obviously, if money were no object, everyone will want the best possible life insurance. Okay, so then from there we can work backward, do the cost benefit analysis to what makes sense. So no, it's not about how much do you need. It's about securing your full human life value. Okay, what is your human life value? Well, the insurance company will tell you, and they are the experts on this. You are not, Dave Ramsey is not. The actuaries at the life insurance companies are the experts at telling you what your economic human life value is. Meaning, if you're 25 years old and you make $100,000 a year, typically, that depends on the company, your human life value is 30 times your gross annual income. So if you make $100,000 and you're 25 years old, they will give you $3 million of death benefit. Okay. What they're saying is 30 years from now, if you manage your affairs correctly, even if you have no increase in your income, you should be worth $3 million, right? Your worth today is $3 million. So you should secure that on a guaranteed basis by taking out a $3 million convertible term policy. And then as your cash flow allows, converting it all to being permanent death benefit. So eventually you have 3 million of permanent death benefit, and eventually you have 3 million liquid in cash value. So you just secured your future $3 million net worth on a guaranteed basis today. That's what it's about. It's not about this scarcity mindset, needs based. Oh, what do I need? And let me just get the bare minimum. And I'm always worried about what it costs. No, it's about securing your full human life value, meaning securing your future net worth today on a guaranteed basis. And now, no matter what happens to you, you will be worth $3 million, alive or dead at some point, right?
Yeah.
So, and then, the other thing I have to add too is that it's sad to me, and I think I'm trying to be diplomatic about how I say this, but it's sad to me how Dave Ramsey surrounds himself with yes men. I think maybe it's somewhat inevitable when you're that rich and famous and powerful. And of course, he's paying these people's salaries. So of course, they're never going to contradict him. But, Dave Ramsey on his channel just has people who are going to parrot what he's programmed them to parrot and never really challenge him. Right. And again, making dogmatic statements about how much life insurance you supposedly need, without ever bothering to look at anyone's situation, right? It's just a blanket dogmatic, do this, right? That's it. And there's no justification given for it either, right? Okay, where did that number come from? You're not a life insurance actuary, are you? Where'd you get that 10, 12x? Like, where did that come from?
I still would like, and I hope someone from Ernst and Young hears this. I would love someone from Ernst and Young, one of the top 10 largest accounting firms, and Dave Ramsey get on a call together and let's talk about how those, somebody's not right based on mathematical, scientific, and economic facts. Ernst and Young says you have to have cash value life insurance in that portfolio in order to, to optimize both retirement income and legacy at the same time. Dave Ramsey says you don't. Now, I think I'm a little confused here. Which one is the right, answer? So, anyways, I'd like to know.
Yeah, yeah. Well, we've reached the end of the video, mercifully, thankfully. And I think we've covered it, but again, it's just a straw man, ridiculous straw man argument. It is Dave Ramsey engaged in very effective marketing. Of course, he's engaging in projection when he accuses other people of all this marketing, because that's what Dave Ramsey does. It's a lot of clickbaity stuff that I'm sure, with all caps and dogmatic statements and name calling, right? Which I'm sure gets a lot of attention to him, but is probably not good, objective financial advice. And that should be obvious.
Oh, and I did want to mention, Logan, just to finish this out. Last night I was on another agent's Facebook page, and he made a post about Dave Ramsey. And then this lady chimed in and said, yeah, I'm so glad I did that. I canceled all my children's life insurance policies, whole life policies that they had. And I'm just like, I really wonder how many people across the country have given up, that protection, the multi-generational wealth they could have created, and they passed up. I think it's actually now that I'm starting to realize it, I think it's actually worse than what we probably think. And I'm sorry, but it's financial malpractice, and it's sad.
Yeah, talk to DeAndre Clayton. He's been in the Medicare community. And one of the most devastating things that following the Dave Ramsey plan does for you is you enter your golden years with no death benefit protection, right? If you have whole life insurance, even if you're not doing infinite banking, you enter your golden years with death benefit protection. You have a very substantial amount of capital that you can tap should you have a long-term care need or other needs, right? Because you have some amount of cash value available to you, and your legacy and death benefit are taken care of. So you don't have to go buy a very expensive final expense policy, right? You don't have to worry about legacy. You have that taken care of. It gives you the peace of mind to know that you can spend the assets you do have because your death benefit protection is there. So regardless of infinite banking, when you enter retirement without death benefit protection, it's a much riskier proposition. And it's sad what can happen to those people.
Absolutely. Like what you said, that policy is a permission slip for them to spend the rest of their money. Because if they don't, what did Tom Hagner say? He says it's just in case retirement, right? I'm not going to spend my money. Because I want to leave some to Johnny and Susie, leave money to Johnny and Susie. What happens? They end up dying, and then the kids end up, buying that country club, going on that cruise, doing whatever, because they didn't have that permission slip, right? And how can you maximize retirement if you're there? Oh, I can't spend my money. I can't spend my money. I can't spend my money. It's a sad way to live, actually.
Yep. And that's what happens when your wealth, quote unquote, is in very risky mutual funds, which are by definition risky, whereas life insurance is guaranteed. Your cash value, your death benefit will not go down and will not be taxed, and you can borrow against it without interrupting the earning, and you can advance yourself that death benefit in the not unlikely scenario you have some form of long-term care needs. So instead of getting absolutely wiped out late in your life, even if you saved up a substantial amount, you are now protected. So you don't get wiped out and you don't become a financial and psychological burden to your children in your old age. All of that whole life does for you, and mutual funds cannot do any of that for you. So, well, I think we've reached the end of another series. Peter, thank you so much for your time. Really appreciate it.
Are we going to do another one? And do we know what topic we're going to
Yeah, well,
Have any-
I have a couple of ideas. The problem for me is it's so difficult and painful to get through this stuff. It's just, it's really bad, and I just feel so sorry for people who have been the victim of financial malpractice at the hands of Dave Ramsey and this other financial advisor that we've seen. It's just, it's very sad, and I don't know how these financial types live with themselves after the damage that they've done to so many families. I mean, it's just devastating when you see someone dies or has a long-term care event. You don't have the protection that you need in place. Mutual funds are not going to protect you against this. Okay, it's just
Yeah, and I'll
sad.
just say, if anybody has any, and please keep it professional and cordial, but if anybody wants to put in the comments, if they want us to do something that they would be interested in, please put it in the comments. But like I said, please have it be professional. I know there's been some very unprofessional comments, and that also makes me sad. But
Yeah, it is what it is. It's social media. So anyway,
okay,
okay, Peter, thanks so much for your time. God bless everyone.
God bless, Godspeed.